All of the research we do at Ancorato are designed to do two things for our clients: increase the return on the structured notes, and then mitigate the downside risk of losing principal.
And I think when you see the notes that we construct, they have a theme. And I think those are easily read, and you can see that theme, whether it be growth or an income note. So I think the advisor immediately knows what we're trying to, our goal that we're trying to achieve. And we're also always readily available to advisors. If they have a question or they want to understand a note structure a little bit deeper, we're open and available to answer those questions for them.
For that question, there's two things we want to do. We increase the return for our structured notes. So that's with our investment bank experience, with the when we go out to auction, that part, and then that mitigating, we're doing a statistical analysis on the drawdowns.
A lot of the things that we do are behind the scenes that they don't know about, like Antonio getting the best execution and best price on the notes. Those are all behind the scenes. They don't know that that's there, but that's an added layer.
Yeah, a lot of our analysis, again, is trying to create the best structure for a structured note. And increasing that return and then mitigating that downside risk. So all of the notes that we review, even notes that we don't buy, we're doing consistent analysis, we're doing statistical analysis to figure out what are the real breach rates, what's the possibility of losing loss of principal for clients' accounts.
Yes, and we really fall into a nice rhythm with Antonio having his initial screen, and then he bumps ideas off of me, and then I'm able to kind of look at some notes deeper for him, some names a little bit deeper. So we really take the fundamental analysis even at the buying level to make sure that we're entering notes that we feel confident in the thesis.
Well, once we pick a note, then we go out to all of our issuers and banks, all of our partners at banks, to really run an auction to get the best return for the clients. That's something that typically advisors don't see, just the availability of banks. And they could be, they could send it out to one bank, but for some reason that bank may not have the best pricing at that current time. So since we're consistently in the market and we're pricing on a consistent basis, we know which banks have a favorable term for a particular structure or a particular underlier as well. And that knowledge of what's going on in the data, what's going on in the options market, and where that real, that carry is lying.
Yeah, so part of it is that timing that we're able to see because of our experience, but it's also the relationships that Antonio has cultivated that allows him to get better pricing on notes, and I do think that's an advantage. And anytime you're purchasing on scale, then I think you're able to get some benefits on pricing.
Yeah, and I think that's something that individual advisors, as like a note gets called, they may just rebuy the same exact note just from the same person they had bought in it. But for us, we're really going out and getting that best price on multiple issuers. Yeah, I think one of the things that advisors don't think about is they typically pick a tenor, and they think for a structured note, they think that that's gonna go full term. So it could be, could be a really good note for a client, the return looks great, but they don't know the amount of time that it's gonna take in order, if that note gets called, the reimplementation of that note. Say for instance, the client needs to get rid of or needs to liquidate that structured note. That we have experience doing that, and we have a team that's supporting us as well, so we can go to the issuer and get that in an expedient way.
And these notes do have a set maturity date, but that doesn't mean that is the optimal exit. And so I think what they don't know is that is what our whole process is based around, seeking alternate exits that could add value and even extend the return beyond what was expected for the note. And I think they don't see the amount of monitoring that is required on a daily basis. The underliers move quite consistently, and monitoring those, the barrier proximity is essential for all of our notes on a daily basis.
And one thing we also look at as well is during that time of the note, where has that implied volatility moved? Has it increased? Has it decreased? And then where are the price movements as well in that? And those are all something that we have to manage and maintain and continually look at and discuss as well.
So one of the strongest themes I think we've really played into was the AI infrastructure build out, and that has done really well for us. But where we're seeing valuations have really increased and we're now peaking, we are looking for more adjunct or side AI beneficiaries. With particular concern, we've done a lot of analysis on the SaaS space and being careful that any names that we pick in these spaces are the clear winners and have a competitive edges. So I think going forward, we're continuing to look at AI beneficiaries, but with a little bit more of a cautious outlook.
Yeah, and to kind of shift as well, we're also looking at interest rates and their movements as well, because that takes into account in terms of pricing, and also duration for these notes, since that's a component of that as well. So we also monitor credit spreads and where those are going as well. And right now, where we feel interest rates are relatively high, now is a very great time for use of structured notes because of that increased amount of optionality we're able to buy because of that interest rate term.
And we have added a couple names playing alongside the demand for electricity with the AI build out. So the data center demand, that's still, I think, a theme that's going to be strong for some time going forward.
Yeah, well, since structured notes are so customizable, there's so much data that's available. So what I really run into is that how do I make all the data make sense? And so what we've done with the use of AI, we've created systems and screeners in place in order to quantify the options data. Is there enough options data available on an individual underlier that we should execute on that? If there's not, what you'll see is reduced return in that structure. So we want to pick the underliers that have a lot of options available. And so we've built structures and screening processes in order to ensure that we're picking those. And then from a valuation perspective, we'll quantify where they are in terms of their cycle. If they're kind of more of a value play, is their growth accelerating or decelerating? Does that valuation still hold with that increase or decrease in revenue? And these are all things that we're looking at, which is something that fundamental analysis, someone of value would look at. But also what we'll overlay with that is options data and the use of put skew, looking at put call ratios to ensure that we're not picking them at an inopportune time. Then we'll combine all that data and we'll do a statistical analysis to show when we put this note all together, how frequently would it breach at the end of that term? If it's a coupon paying structured note, what's the percentage of coupons that we should expect to receive? And that's kind of the information that we'll bring to the table, both Cheri and Caleb, and we'll review that, and they'll scrutinize that as well and ask me questions regarding the structure and all that information as well.
Yeah, I think something important to note is that we are consistently, I think, modifying and improving our process. We're always seeking how can we get more signals better, faster, and add more data to our hold and sell decisions. So we have really modified and added, we've added Monte Carlo simulations, anything to give us more of a forward-looking view, to add a layer on to the already back testing that Antonio does. In addition, we do look at the options market, options chain pricing, put to call ratios, anything for additional signals, especially as the note nears maturity, where a lot of the dynamics of the note change toward the end of the life. So we look for different clues, technical charting. So we do try to put together all of these pieces and really have the most solid foundation for our thesis intact.